Okay, let's take a closer look now at what moved the market today, and for that we're joined by Julia Lee from Bell Direct. Good afternoon to you, Julia. Well, another good session for the Aussie share market. Some good numbers in there.
Nina, the rally continued on the Australian share market today, but by the close we had given back a substantial amount of those gains, and we just finished off the lows of the day. I've got the intraday graph behind me, and you can see that investors and traders are starting to get a little bit nervous. We saw a new high for 2009 locked in, so some profit takers coming in the afternoon, selling down some stocks. Now, we saw the leaders on our market in the materials, the industrial, as well as the property sectors. So it does look like investors are still very comfortable with adding risk to their portfolios. Conversely, it's the defensives which were once again out of favour, making losses, and we saw losses in the consumer staples, the telecom and the utility sectors. The retail area is worth a mention. Now, retailers benefit from the very high Australian dollar at the moment. In fact, if we have a look at the Aussie dollar and how it's tracked over the day, you can see it's been a very good session for the Aussie dollar, with the Aussie dollar cracking 92 US cents during the session. That, of course, is great news for importers, so retail is benefiting from that. JB Hi-Fi also seeing broker upgrades, so its stock actually reached a brand new high, an all-time high. So if we have a look at JB Hi-Fi share price, this is in the last 30 days, you can see that the stock soared today, up as much as 8% during the session, and by the close up by 5.6%. But JB Hi-Fi wasn't the only one. We saw David Jones also reaching an all-time record high, up by 2.1%. Harvey Norman was up by 2.6%, and Billabong also doing well in that retail space, up by 4.2%. Bank of Queensland in the banking space was up by 2.2% after it was the first of the ranks to report its annual profit. Cash profit was up by 21%, pretty much in line with expectations, but signs that the bad debt cycle may be bottoming out, and that it may come to an end this current financial year helped its stock up higher. Some good margins there also in the second half, and the market's now starting to focus on that November interest rate decision on Melbourne Cup Day. The markets are now pricing in the probability of a 50 basis point rise when we see the Reserve Bank meet on Melbourne Cup Day, and that's really what's behind the strong rally that we've seen in the Aussie dollar today.
Yeah, some people might need to have some winnings on Melbourne Cup Day to pay for their higher mortgages if the RBA does go that way. Okay, let's talk about the banking sector, Julia. You have a look, all of the majors doing really well except for the NAB, which really stood out like a sore thumb, didn't it? What was behind the 0.5% fall in its share price?
I guess what's happened with NAB today just demonstrates how keen the big four banks are to get more depositors' funds. The National Australia Bank came out with an announcement that they were going to scrap their monthly service fees on 2 of their everyday banking accounts. They were also going to scrap the $25 fee they charge when credit card holders go over their credit limit. Now, this is designed to attract more depositors' funds, and it follows hot on the heels of an announcement last month that National Australia Bank was going to also scrap its $30 overdrawn account fee charge as well. Now, this latest move is likely to benefit 860,000 customers and is designed to gain more depositors, so decrease NAB's reliance on the wholesale funding markets, but that's also going to shave off revenue as well. So the latest move is expected to impact on revenue at $110 million per year. So this latest announcement, great news for customers, not so good for shareholders. National Australia Bank in the year to date so far doing pretty well. This is in 2009. Its shares up by more than 50%, but today losing 0.5%.
And Julia, BHP Rio, we had an update late this afternoon on that iron ore joint venture proposal. What's come out?
Look, there's been more uproar, I guess, against this joint venture proposal this week. We've had the World Steel Organisation come out and recommend to the European Competition Commission to not let the $140 million joint venture go through. Now, the World Steel Organisation represents about 85% of steel production and includes 19 of the largest steel makers in the world. And I guess to try and pacify some of the opposers, BHP Billiton and Rio Tinto have come out with an update. Now, of course, this proposal is to put together their operations and the infrastructure in the Pilbara region in Western Australia. And they were going to have separate marketing arrangements, but they were going to dually market up to 15% of the joint venture under the joint venture name. But they've decided not to do that now. They'll be doing marketing just totally separately, so not that 15% in terms of the joint venture arrangements. They've decided to scrap that. Hopefully that will pacify some of the opposers who are opposed to this deal. The Pilbara region supplies about 1/5 of the world's supply in terms of iron ore. So BHP Billiton, Rio Tinto still doing pretty well today on the back of higher commodity prices, but really we're expecting this tie-up to happen by the end of the year.
Yeah, watch this space. Okay, Julia, thanks so much for that. Appreciate it.
Thanks, Nina.